Apple is Barry's first idea. This one's been out of favor lately.
Yeah, all the FANG stocks have been out of favor. Apple was probably the one that was doing the best on a relative basis, and kind of fell apart the last few weeks. Really through no fault of its own, right? It's the China shutdowns, so it just can't get enough iPhone product into shoppers' hands. There was a rumor yesterday that because the economy is weakening, it looks like Apple's cutting orders on the watch and some iPads. I don't think that's really a material part of its business. It's really all about iPhones, and there's still strong demand for iPhones. I'm just looking at the catalyst for 2023. You've got the stock now trading at a pedestrian valuation, 20 times earnings. This is, the largest company in the world, aside from Saudi Aramco. The $100 billion of free cash flow that it's going to be using to buy back stock and pay down increase dividends. And, iPhone 15 coming out in September, a whole new refresh, I think, of the product line, as well as new stuff in virtual reality and artificial reality as well. So we like Apple very much. You can't live without your iPhone, in my opinion. And, it's now come down to a very attractive level, and we expect a better year for Apple in 23.
Wired magazine had an interesting piece in October saying that Apple is getting more and more into the ad business. They'll be putting ads on the App Store, but they risk annoying the users. For sure.
There's a fine line, and they can do some of that through email marketing as well. But, ads are an easy way to get a high profit return. But as long as you don't, as you said, make the customers unhappy.
We've got your next idea, BlackRock. Now, so remind us what they are.
It's the world's largest asset manager, mainly selling ETFs and investment products to institutions and directly to the customers worldwide. I think it got up to $10 trillion of assets prior to 2022, pulled back. But unlike a lot of asset managers and fund managers, BlackRock had tremendous inflows so far this year because they have so many different vehicles that you can invest in. If you wanted to bet on Polish bonds, you can buy. There's an ETF for that. And so no one can catch them in the type of different products they have. It's a nice proxy for the stock market. If you think the stock market's going to do well over the long term, BlackRock is more of a leveraged vehicle, obviously, and a nice dividend, perfect balance sheet, and still ETFs they're huge, but they're still a small portion of the overall investment universe. So lots of room for it to sell ETFs on, you name it, stocks, bonds, private equity, as well as Target. So we're excited to own BlackRock in 23.
And finally, Costco.
Yeah, so I'm just looking for durable businesses that can come out the other side of this slowdown even stronger. And, Costco, it's business as usual. Obviously, the pandemic results are, those big gains are over. But the members that it got over the last few years, they're not going to give up their Costco memberships. And we think in 2023, Costco is going to increase the membership fees by a little bit, just to match inflation, as well as the balance sheet is now ready for another special dividend. It paid one a couple of years ago. It's going to open 20 to 30 stores a year, we think, for the next decade. Still underpenetrated outside North America, and one of the best shopping experiences you can have. And finally, it's mostly groceries. It's mostly food, which is a very defensive place to be if you think the economy is going to slow.
That's interesting, yeah. And they have fierce loyalty, I suppose. People love going there.
People love going there, and everybody complains about how busy the parking lot is, but then they're so excited about the savings that they think they're getting by buying 8,000 pounds of almonds for $100. So
that's right. What about Walmart? Would you bother with them these days?
Not really. I mean, I'd be more interested in a Loblaw because I'm positive on Canadian growth, and I think with immigration and Canada's going to be a shining star. So and Loblaws has got some of the best real estate, so that would be something that I'd be more interested in. And but I'm sticking with Costco.
Okay.